Bitcoin's price fell below $80,400, breaking a critical support level and sending ripples through the entire crypto market. This Bitcoin price drop wasn't just another dip. It signaled a shift in market psychology, one that's now forcing investors to reassess not only BTC's path, but also the broader implications for Ethereum and Chainlink. The immediate trigger was Bitcoin's drop below the $80,400 support threshold. That level had held for weeks, acting as a psychological floor. Once breached, it amplified negative sentiment across the board, dragging down altcoins and shifting trader focus toward risk management. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. But here's the catch. While price action suggests panic, on-chain data tells a more nuanced story. The Coin Days Destroyed CDD indicator, which tracks spending activity from long-term Bitcoin holders, is showing a notable decline in selling pressure. That's a critical detail, because if the worst sell-offs were coming from those who have held for over 6 months, we'd see CDD spiking. Instead, it's cooling, suggesting that despite the Bitcoin price drop, the most committed holders aren't fleeing. Meanwhile, attention is turning to Ethereum and Chainlink as potential indicators of broader market health. ETH has been stuck in a range, but analyst Don Crypto sees potential for a breakout. Clearing $2,400 could open the path to the 200-day average at $2,633, but failure to hold above $1,900 could signal deeper weakness. The ETH breakout level isn't just a number. It's a test of whether smart contract demand can withstand Bitcoin's drag. Chainlink, despite solid partnership news and growing adoption in cross-chain infrastructure, still shows fragility. Analyst Gel notes that while fundamentals are improving, BTC's downward momentum has muted any positive momentum for Link. The important part isn't just that Bitcoin dropped below $80,400. It's that the market's reaction reveals a split personality, weak price action on the surface, but underlying resilience in holder behavior. This contradiction creates uncertainty. Are we seeing a temporary correction before recovery, or the start of a deeper cycle driven by macroeconomic stress? Crypto market stability isn't guaranteed by on-chain metrics alone. While reduced CDD activity is reassuring, it doesn't eliminate the risk of external shocks. Inflation, regulatory moves, or sudden liquidity crunches could still tip the scales. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The takeaway is this: the Bitcoin price drop matters not because of the price itself, but because it's exposing which pressures are structural and which are temporary. The next signal to watch isn't a price target, it's whether CDD remains flat or spikes during further declines. A spike would confirm renewed sell-off pressure. A continued cooldown could mean the market is digesting the drop without breaking. For now, the landscape balances on a narrow edge. Bitcoin's negative sentiment is real, but so is the quiet strength in long-term holder behavior. Ethereum and Chainlink may offer clues, but they're still playing defense. The real test comes next. Can the market stabilize under inflation pressure, or will the Bitcoin become the start of something deeper? The data hasn't answered that yet, but it's starting to point the way.